Welcome to Joey's Business World. Today, we are diving into the fascinating world of banking. Whether you are a seasoned professional or just starting your journey, understanding the fundamental of banking is crucial. So let's get started. At its core, banking is all about managing money. Banks act as the intermediaries between those who have the money, like individuals and the business, and those who need the money, such as borrowers and investors. But there's much more to it than just holding and lending money. Let's break it down. There are several types of banks, each serving different purposes. The three main types of banks are commercial banks, investment banks, and central banks. Let's start with commercial banks. Commercial banks are the ones we're most familiar with. They handle everyday banking needs like checking and saving accounts, personal loans, and mortgages. Investment banks, on the other hand, focus on helping business raise capital, trade securities, and managing investments. They play a critical role in financial markets. Central banks, like the Federal Reserve in the US or the Reserve Bank of Australia, oversees banking system and implement monetary policy to ensure economic stability. So let's talk a bit deeper on the commercial banks. Commercial banks offer a wide range of products and services to meet the needs of their customers. Let's look at some of the key offerings. Saving accounts, easy. Those accounts let you store the money securely while earning interest. Checking accounts, perfect for everyday transactions, providing easy access to your funds. Then loans and mortgages. Banks lend the money for personal needs or buying a home, which borrowers repay over time with interest. Last, credit cards. They offer a convenient way to borrow money for purchases, with the requirements to pay back the borrowed amount plus some interests. Now you wonder, with all the banks, how do banks make money? They for sure not printing the money, primarily through the interest rate differential. They pay interest on deposits and charge a higher interest on loans. This difference is known as the net interest margin, which is the indicator we're going to touch on later. Banks also earn from fees and various services like account maintenance, overdrafts, and financial advisory. Central banks play a crucial role in the economy by controlling the money supply and interest rates. They ensure financial stability by regulating commercial banks, acting as the lenders of last resort and managing inflation through monetary policy. The banking industry is continuously evolving, especially with the advent of digital banking and AI technologies. Today, customers expect seamless online experience, quick loan approvals, and personalized financial advice, all of which are becoming possible thanks to the advanced technology. To sum up, banks are so important to our daily lives and the economy at a large scale. They provide essential service, support economic growth, and adapt to technological advancements to meet changing customer expectations. So understanding the fundamentals sets a solid foundation for exploring more complex banking topics. Now, have you been working in this industry for a while, or you're just looking to transition into this industry? We're going to talk more about the products, the service, the data analytics, and AI applications in this industry. So stay tuned and click subscribe. We will see you in the next one.